Earlier today, Bitcoin crossed over the $90,000 mark. This is the first time Bitcoin's done this in over a month and a half, and a lot of optimism has returned to the space. What's going on, guys? It's Crypto Dave here at the top tier, and in this video, I'd like to talk about Bitcoin's recent price action, whether or not we should be feeling bullish about the recent pump to $90,000, and a certain trap that you might be falling victim to, and how to avoid it in the future. So guys, if you like these market updates, definitely subscribe to the channel, tick the little bell, you'll get notified every single time we post. Without any further ado though, guys, let's go ahead and jump into the video. First things first, let's talk a little bit about Bitcoin's recent price action. You will notice two key things have developed here on the daily time frame for Bitcoin. Number one is we have broken our downward sloping trend line that has acted as resistance for the past 3 months. We've seen a nice decisive break above the trend line, as well as some very nice bullish follow through for the week that came after. So this is a very clean breakout. We are no longer seeing these macro levels of resistance acting as such. And clearly the market order flow is far in favor of buyers than it is sellers. It's also worth noting that we've crossed back above our 21 and our 50 daily EMA cloud here. We are no longer seeing this cloud coming in and acting as resistance. And we are also very close to watching the 21 cross above the 50 EMA, which is always a great sign when you have that shorter term moving average trading above the longer term moving average. Now, as time develops and we see Bitcoin pull back, we're going to want to make sure that the EMA cloud is holding as support should price come back down into the range and retest it. We can see very clearly in healthy uptrends, the EMA cloud comes in and acts as a range for buyers to establish that control within the market and continue to set in the higher lows and higher highs. So it's very good that we've crossed above our EMA cloud, but we want to see that bullish cross, and more importantly, we want to see the cloud come in and act as support in the future. Overall, the daily time frame has made a lot of progress, and I think currently we need to have our eyes on this $94,000 to $96,000 range for Bitcoin. This was the level of resistance that came about when Donald Trump announced the strategic reserve, and ultimately price pumped very quickly, but it was of course short-lived, and we ended up chopping down for a couple of months. So I would definitely keep an eye on that level to come back into play. We can also see that the 618 Fibonacci extension target from this top to bottom move also comes in line with this sort of $96,000 level here. So plenty of confluence looming above. These would be my current bullish targets for Bitcoin. It would be at this point in time that I expect the bears to really get a true test and to see if they can maintain some sort of control within the crypto market. So there's not too much else to say as far as technical analysis is concerned. We've broken some macro downtrends. We see a lot of bullish follow through. Things are looking really nice for the bulls, and I think that this can sustain over a couple of weeks. But I want to take this moment to talk to you guys about a trap that you've probably fallen victim to as recently as the past couple of months. So I want you guys to notice the $73,000/$74,000 price level for Bitcoin. This was a major level of resistance back in 2024. We set this in as an all-time high in March. And ultimately, for about 8 to 9 months, this was our ceiling for price, a previous all-time high figure that acted as resistance every time we got close. So as such, we want to make sure that this key level is holding as support on the higher timeframes, and that we are continuing to hold a previous level of resistance as newfound support. But the problem is, and this is where the trap comes into play, a lot of people think this way. Support and resistance can be a very, very easy thing to identify, especially for new traders, and it brings a lot of attention to a specific level. So you'll get a lot of people who are keeping this level in mind, who have probably placed some long orders, or they're probably waiting to buy Bitcoin until they get that retest because of the technical concept of support and resistance. While this is not technically wrong, it is a little misguided, and it leads to people getting trapped into the trade a little too early. You guys will notice I have 3 blue circles here highlighting the 3 separate lower lows that we have set over the past couple of months. And you were probably a part of the group of people who were waiting for that $73,000 level. You saw one of these lows get formed. Maybe you were really encouraged by the strategic reserve announcement. So you probably came off the sidelines, you deviated from this plan to wait, and you entered at a premium. Ultimately, the bears still had control of the market. There was far more seller market order flow than there was buyers, and price was not ready to resume any sort of conclusive uptrend. Naturally, the lows here got flushed, as well as all of the entries and all of the leverage trades that got placed back here after this low was set in. So you are slowly but surely, number one, pulling people off of the sidelines and getting into the trade where they're otherwise not comfortable or where it's not really a part of their strategy. And number two, you do not have yet the bullish follow through or that market order flow where buyers are outpacing sellers. So the people who are entering the trade and the people that are entering it early are going to get wrecked before the trend actually makes that reversal. So you'll see a lot of times a very key level like this $73,000 level is actually going to get front run even multiple times, slowly pulling people off the sidelines, slowly wrecking these positions until, most importantly, these same people are no longer happy about these discounts, right? And I've used these little emojis and I'm happy to finally get to them, but people look at these first couple of lows and they think, oh, great, these are juicy buying opportunities. Okay, I didn't get the bottom, but I can come back in and I can get in on the trend while it's still early. And then they get wrecked, right? And this is where you create that maximum level of pain because you have a lot of retail, a lot of low capital traders who are sitting on the sidelines for a very key, clear, easy as day level to spot on the chart until they are no longer believers in these discount ranges, right? That is where that max pain comes through. And that is a big thing that happens here at these very key levels. It's a big reason why you are caught 2 steps behind the trade at all times. And this is happening way too often to too many people that I see all over the crypto space. And so I just wanted to point out this phenomenon that you have here with these key levels, these easy to identify levels, and the relationship that smaller traders are going to have. Now, revisiting some of my thoughts for Bitcoin, we did have a multi-month, nearly a 9-month long range for price action in 2024. It's very important to note that even though we get these waves of bullish price action, it does not mean that the corrective, choppy period of time is exactly behind us. So as we are watching price, obviously things look great. We want to see some of these levels of resistance. We want to see how price interacts with some of these levels, whether or not sellers can actually come in and reclaim control of the market where they would be anticipated to do so. These are going to be very key things to look for moving into the next couple of weeks. Can we get this bullish EMA crossover? Can we see the EMA cloud come in and act as support on any sort of pullbacks? These are going to be the next steps for the bulls. We're going to see the bears get tested here rather soon, and this is going to be a proving ground for Bitcoin to establish whether or not we are ready for more all-time highs. Are we ready for price discovery? Are we ready for that influx of new capital and new volume into the space? It's too early to say yes or no, but we know what we want to watch. And guys, if you want to catch all of my updates in real time, as well as my trading positions, you can do so with the link in the description below. You can join our Discord server, get access to myself, as well as 20 plus other trading analysts between stocks, crypto, and Forex, all there to better your game while you learn. Guys, it's a great opportunity. Definitely take advantage. And until the next video, I will catch you in the Discord. Peace.